Mike Atwell, you're head of Middle East operations based here in Dubai for Cushman and Wakefield. Where is the bulk of your business these days?
We have three core service sectors we focus on. Firstly, it's office agency and tenant representation, so helping corporate occupiers either move offices or relocate or renegotiate their existing lease terms. In the market at the moment, we see a lot of that happening, and it's certainly a good bulk of our work. The other area is valuations, feasibility studies, consulting work for developers and investors. And the third area is what we call the capital markets area, which is looking at raising equity or taking investment money out of this region to invest internationally through our European network. Plus, we're looking at brokerage and capital markets work within the MENA region, so investment work.
Would you say that there's a lot of money leaving MENA and going to other areas?
Over the last year or so, there hasn't been much. The capital markets activity or arena has been very quiet all across Europe. People have always viewed the Middle East as a good area of raising equity, but for the last 12 months it has been quiet. But we're starting to feel that activity increase. We certainly feel that some of the major banks here with the private investors are looking to start investing into real estate again, and they're looking at the core markets of UK and London, elsewhere around Europe. But it's a slow start back to recovery.
So it's a little bit, it sounds like the UK, London especially, like some of the major US cities, has right now bargains available in property.
We've seen the pricing has changed a lot though, and particularly in UK. It was, as you say, a bargain market, could be described as that, but debt was very difficult to obtain, so that's why pricing was very, very few transactions. What has happened now in the last 3 months is we've seen a resurgence in activity. Pricing has gone back up again now, values have gone back up, and we are seeing more interest coming through, but it's not the same as it was, say, a year, 18 months ago. It is a slow return to activity.
But you're very brave because you opened your office here just kind of at a low point.
Yeah, I came across beginning of September last year. Cityscape last year was very active. But very soon after Cityscape, the market changed quite significantly.
It wasn't your fault, obviously, or your company's.
I hope it wasn't. So obviously we came in at a very difficult time, but we have a long-term plan. At the moment we're staying small. We have about 6 or 7 of us here, and we are looking to expand, but we will only expand as the right opportunities arrive. We're very confident on the market. It is recovering. We see plenty of activity, but we're not going to expand at a huge pace. We'll go as I said, as opportunities come through.
Sure. You mentioned before that you're doing some feasibility studies and so on. Is there more of that than there has been in the past few months?
It has increased, not necessarily because people want to do more development, but people are looking at their existing projects. What are they really worth now? Should they continue with development? Some of the developers, obviously, the big developers have land available for sale. What should they do with that land? So a lot of our work is basically with developers, looking at existing land plots, looking at existing development sites and saying, what should we develop now, or should we continue with the development? Should we put it on hold? Should we exit? Should we sell? Or should we put a different development, what we had planned?
Sure. So it's damage control to some extent.
You could say that. I mean, I wouldn't say it's damage limitation, yeah, and looking at really what should we do now, because the market has changed so much. Values have changed, rents have fallen, demand has fallen, but we are seeing this return to some good activity now, but on a very, very different market to a year ago and 2 years ago.